Welcome back, everybody, to another episode of Debits and Credits with Haas and Dawe, and here we go, rocking and rolling with one on company credit cards. Now, company credit cards is something that over the lifetime of at least of our careers here working on escrow company audits, that 20, 30 years ago, not very often, not very common. There'd be maybe 4 or 5 transactions a month dealing with a credit card. But in today's world, with auto debits and with electronic payments and with debit cards and with credit cards, it's very common for an escrow or title company with their operating account that more than half of their transactions will be paid for using a credit card instrument of some sort. And there are benefits that where it can be used by the company as long as some risks. And we're going to talk about both sides. And one hand where it's helpful is where it's gotten in today's world where there's so many upfront costs that escrow needs to cover relative to the transaction. And while it may be easy to say, well, the real estate broker or the buyer or seller should pay these direct, from an efficiency standpoint, it's a lot easier if the escrow company will pay for it and advance the funds, usually on a credit card now, and then they can recover their costs when escrow closes. Common costs are the HOA, the homeowners association document fees, which can be as much as $750, $800 depending on the management company. Of course, all the documents that the buyer needs to approve on dealing with the homeowners association. If an escrow is in the city of Los Angeles, then there's the Department of Building and Safety fees for the basically the certificate of occupancy that needs to be cleared before escrow closes. And these are the two more common ones. There's now something um, with up in Sacramento on mobile home transfers, where upfront costs need to be advanced to the state so that the clearance on the transfers can be approved. So these are different areas where it can be for the benefit of the escrow company to do so. It allows the escrow company to do the job faster because they aren't going to be waiting for the seller to be getting back with them. Well, it got approved, it got paid, and so on. The downside of some of these charges, though, is that there could be a fee involved, meaning a service fee or a merchant fee that the escrow company, in this case, on behalf of the buyer or the seller, needs to incur. Because normally when people use their credit card, let's say to go to a restaurant for a meal, the company doesn't add onto it a merchant fee onto the credit card charge. Maybe built into their fees, but into their cost, but it's not a separate line item. But now, anytime you make a payment to government, whether it be for income taxes to the federal government or to the state of California, the Department of Building and Safety fees, etc., it's very common for the 2.5% or the 3% merchant fee to be added on at the time of the charge. Now, there are other benefits and perks of using the credit cards. One is that came about starting in the 70s, cashback and credit card perks and other types of account benefits that are accumulating points on behalf of the credit card user. So these can be used to pay for trips or for travel or for getting mileage benefit on airlines and so on. And also, credit cards can be used as a safety net for cash flow when needed. This needs to be done carefully because you don't want to just build up a huge balance on the credit card by taking cash advances, because that also creates a lot more in the way of fees and interest that has to be dealt with. Now, the risks of company credit cards are personal transactions in that the owner, or the officer or the management team that's been given access to a company credit card can be guilty from time to time of using the credit card for personal charges. Now, this is okay. Excuse me. This is okay if there's an immediate payback, reimbursement to the company, or there's a proper allocation, or if when the credit card statement comes in, that the employee or the officer will write their own check for the personal charges, and the company will write its check for the company charges. Now, what also can be a concern of excess use of credit cards is it going to build up a liability that has grown into something that's out of control, meaning it's not going to be something that can be paid off on a monthly basis. Well, for the escrow companies and for the title companies, it has an effect where it's creating excess liabilities, large liabilities that can create an out of compliance situation. For the independent escrow companies, there's the magical sections 17210 of the financial code, where there's got to be so much maintained in the way of liquid assets within the company. And for a title company, they have their requirement under the Department of Insurance of maintaining so much in the way of what they call net current assets or working capital, where it's current assets minus current liabilities has to be above $10,000. Well, if you built up a lot of credit card debt and the liability's gotten a little bit out of hand, it can create current liabilities that are in excess of the necessary amount to maintain compliance. Now, if you do get a company credit card, here are some pointers to pay attention to. Create a written credit card policy within the company. And if it's something that, particularly where you have sales representatives or escrow officers who have access to the company credit card for purchases, you want to set up spending limits. There's only so much per month that can be put on the company credit card by this particular user. And where it's in writing that personal purchases are prohibited and are grounds for disciplinary or even perhaps termination, depending how abusive it turns out to be. And it could be that the sales representative or the escrow officer has a limit of $1,000 per month or $5,000 per month of what can be charged on that particular credit card. You also want to have a policy that all receipts are saved per purchases. There can't be an excuse that if somebody's going to come and say, well, we used a credit card. Oh, they didn't give me a receipt or I didn't get a receipt. Well, in today's world, particularly with the size and the volume of these transactions, it has to be a no exception policy. That receipts, if there's going to be reimbursement made for a charge on the credit card, there has to be a receipt provided. And in today's world, there's almost no excuse for not having a receipt anyways. These receipts can be either given in hand in person, they can be texted to somebody, they can be emailed to somebody. The receipt can be screenshotted. There's no reason that anybody who's providing either an expense report dealing with credit cards or is expecting a reimbursement or is expecting the company to pay for the credit card statement, there's no excuse for them not being able to provide the substantiation for the transaction. And as an auditor, we commonly ask for these receipts. Now, if it's a $4 item to Apple Pay or a $12 item on Amazon, we might not want to question that because of its lack of materiality. But if there's a pattern and we're seeing on the credit card statement charge after charge after charge for Amazon or for an Apple Pay or for um, certain things where it's um, Google and you're seeing that it's over and over and over, it might add up to a significant amount, and that may not be actual company purchases. So that's why receipts are needed. Plus, also keep in mind, just giving the auditor a copy of the credit card statement, that's not a receipt. That just shows what was purchased. For example, let's say you buy a computer system from Dell, then there's no reason that you wouldn't have already received online the receipt for that purchase from Dell. Or if you went to Best Buy to buy it, for sure you would have a receipt for that purchase on there. And then you want to make sure that it's known to all employees that management has a right to approve the charges before the statement will be paid. And they also have the right to approve the charges before they're even charged. And so this is something that you want to be firm about your policy with a very low, if not even a no tolerance accept level for exceptions. And the type of thing where with the, if an it's no different than any other expense report being turned in, that management has the right to approve that purchase. And that's why if there's anything that's going to be significant, the person should be clearing it before the charge card is used for that acquisition. A lot of times we'll see on the credit card statements computer purchases or travel expenses that are significant. Again, there should be backup to that as to the receipt for the money that was actually spent, but also what's the business purpose? It's like asking the five W's that we learned in grade school. You need to have backup for for the business purpose of what's being charged. Who was being taken to dinner? What was the business purpose for it? What was accomplished? When did it happen? Where did it happen? And why was this an important acquisition? So these are things where you want to make sure that there is a good policy in how the credit cards will be worked, and therefore how the tolerance or the lack of tolerance will go forward within the company. Now, you want to be careful about with company credit cards as to how many people are going to have access to them, or do you just go out and get a separate credit card for each individual, or do you tell the individual you need to go out and get a credit card and have it dedicated just to business purpose for our company? Because anything that where an employee turns in something with for expecting an expense reimbursement or expecting that the credit card will be paid directly by the company, there's got to be substantiation for what it's being spent on. So these are the pluses and minuses in today's world where there's so much being done electronically, then credit cards are going to be used commonly. So have a policy, make sure there's a prudent use of them so that the use doesn't get out of hand. You don't have created false expectation among the employees on what will be paid or not paid and how it's going to be approved. And where you're not just you, meaning the company, is not building up a large liability from credit cards being used and used and used, and where the cash flow is not allowing them to be paid. A couple of cautions on that because there's going to be finance charges every month. There could be late payment charges. There could be finance charge for the credit card balance not being paid. And this is something that gets to be of concern as the balance grows and grows and grows. And something that might be, whether it's a written policy or it's just a credo to follow, it's a thing that someone will say that even though you're using your credit card to pay for the purchase, you should be telling yourself, I'm not gonna make this purchase if I couldn't pay for it today. Meaning that you couldn't be writing a check for that same purchase today, that you shouldn't be using credit card and letting it build up and just trying to be always on a deferral basis that, well, I'll get to it. Next month's cash flow will be better. I can pay for this month's charges and so on. So be careful with your policies, be prudent with the use of the credit cards, and then there will be a situation where the snowball doesn't create and such a large amount that it makes it difficult to get out of that debt. That's for today's podcast with Debits and Credits with Haas and Dawe. We'll see you next week for another exciting podcast. Thank you.